Hi, good evening, everyone, and welcome to tonight's webinar. It is the weekly Elliott wave market analysis that we have every week during this time. So welcome just once more. So this is what we do here. What we do here is just to give an overview of the market. I do not discuss any specific strategies that we use in our premium group. So what we do here is just to get the overall direction of the market, and because that's the most important thing. You need to get a direction before you get a trade setup. So that's what we do here. We get the direction of the market, and then we get trade setups from the direction that we establish here. So we use the Elliott wave method mostly. I use the Elliott wave method mostly to analyze the market. So in the lately, I have been shying away from cluttering my chart with all these labelings and wave counts and everything. I am trying to just put on the identification of the patterns on my charts. So Elliott wave is mostly about patterns and pattern identification, and knowing how these patterns interlink with each other, where they occur. So it is not so much about the wave counts and labelings and all those things. So it is mostly about the patterns. If you are able to identify the patterns, then you know what is going on. Because you can just put on all these labelings on the charts, which don't mean anything if you are not identifying the patterns correctly. Okay. All right, so let's get started. We're going to start with the US dollar JPY pair. That's the reason why I'm starting with this one. We've actually discussed this one in the premium group during the week. We actually did a video on it because it's got a very interesting setup. Okay. So as you guys know, those that have attended, watched these webinars a couple of times will know that what I always do, I always start by identifying the impulse of the swing. So you can see here, we had this impulse here, right? So that's our impulse. But there's something very interesting with this impulse. But there's something very interesting after the impulse. We always get the correction. So this is where most people have a problem, identifying the correction, what kind of correction it is, when does the correction end, and how to trade within this correction if you can. You know? So, but there's something very interesting. There's fractals that are happening on this pair. So notice something here. So after the impulse, this is my top here of the impulse. I get this. Let's use a different color. After the impulse, I get this big correction here. See this correction that I've got here? I get an impulse and I get a correction. Notice something in a different color. Let's do this one with the red now. You see that there's also an impulse here. And then it does this. Can you see that this and this one on the larger degree is exactly the same? Okay, so another one here again. There's this one here in green. So we've got the larger yellow followed by the middle red and the smaller green doing exactly the same thing. Very interesting that this pair always does the same thing. It did this and then it made this correction. It did this impulse and then made this correction again. And then on the larger degree, it also did the same. So what am I expecting? So I'm anticipating that this degree, I notice that this degree is repeating itself. If you look here, we've got this degree, did this, it did this. Following what has been happening before, what do we expect? We expect that this pair will do this and then carry on, right? You see there. All right, so what will this whole thing do eventually? We're going to have this big impulse with this correction giving us the A, B, C. But notice something in this correction. You also have the, let's do that in yellow. You also have this big A, B, C in yellow, in the lower degree. So you see, what we've just done here is identify the direction of the market. So we are expecting, those that have watched the previous videos will know that we have actually taken a short trade here on the downtrend, and we are still short, anticipating it to be short up until the 104 area. But I couldn't help or resist taking this trade because it was so clear that it is repeating exactly what is happening in the other, in the lower time frame. So it is fractals that are just repeating themselves in different degrees. So I could not resist this trade. So I'm going to clear out everything and we just go straight to this area where we want to take this trade in the opposite direction. Okay, so clear all the drawings. This is the daily chart. I'm going to go to the 4-hourly chart. So I'm going to try and redraw all those patterns on the 4-hour so you can see them clearly. Okay. So starting with a smaller degree, it was this one, smaller one, right? You see, let's draw it properly. Where this is the impulse. Remember the impulse? Remember the impulse in yellow? And then after the impulse, we have this impulse in the correction that does this in green. Okay, but then again, we've got another one. Let's call this one the red degree that does exactly the same thing in the higher degree. You see, I'm not even putting in any labelings. I'm just showing in the fractals how the market repeats itself. Let's use the yellow now to show another degree. Look at this one. Larger. You see how this is just keeps on repeating itself. Okay, so after this larger one has completed, now we're back to the smaller one again. Let's use green. We see that we've got the green here and then here. So what do we anticipate will happen here? And you can see that all these corrections that we're getting after the impulses, these are regular flats. You can see it's a regular flat. It does not break the extreme of the impulse. It ends at the area of the start of wave 1. Same thing. This is the extreme of the impulse. It is not broken. It just reverses there. This one just slightly breaks. This is also a regular flat. This one does not break the extreme of the impulse. See here, it does not break it. It reverses there and then just ends at this area. Same thing here. We went down here. It went down. It went up. It went down. So now we are expecting that it will come back up to the same area and not break the top. Maybe it won't break the top, or it will just end up around that area and it will do this. And then this move will carry on to the downside. So how many trades do I have so far? This one has already happened. So I've got this trade, and this is actually a very risky trade because this is against the trend and we are in a longer term trade on this one. So, but we've got this trade here that we can take. And then after this trade, we're going to have a very nice sell setup. We're going to have a very nice long-term trade here to the downside, targeting 104. So this whole correction will have this impulse and then this larger correction. Let me just draw the larger correction in another color. Then you'll see what we have here. The larger correction, larger. So the whole thing, this whole purple is and clear A, B, C in the larger degree. So we've got now the direction of the market. We know that we've got this bigger zigzag. You see the zigzag there? But then now we want to trade this area. Now I'm going to remove everything because we know that we are here now. We want to see how we trade this move up now. So we clear out all the drawings. So this, I'm on the 4-hour chart now. So that is that impulse in green that I just drawn up. So I'm going to bring up my labelings again now. Okay. So this is where we are. And this is what I'm expecting. I'm anticipating this move to the upside, but how are we going to trade that move? But before I show you that, let me just show you that this repetitive moves just keeps on happening everywhere. You see this one? Same thing, and then it goes. See, this one I didn't show you, but it's doing exactly the same thing. Okay? So this is fractal. The market always repeats itself. If you've got the eyes for it, you can actually spot these things. So now this is the 4-hour chart. I'm going to go to the 1-hour chart. 1-hour time frame. See how we want to trade this move. You see what is happening already? We did a video last week when price was still here, and we said we are anticipating a buy. This thing was very bearish, and we knew that when it takes, this is that low of the impulse. Let's get that drawing. I knew that when it takes, because that's how a regular flat behaves. I know when a regular flat just takes the low, the extreme low of the impulse, this would have been your impulse. When it takes here, it reverses very fast. All right, so it went up. So I was anticipating that we were going to do this. We're going to wait for this flag to complete, and then we buy it. And then this flag is still forming, actually. This flag is still forming. Let me remove all these lines here. And some who trade what they call double bottoms and all will tell you that we've just had a nice double bottom here. And this is a bearish engulfing candle. You had a bearish engulfing candle here. And this is how I'm going to trade this. On the break of this flag to the upside, then we buy. Right? We already bought in our premium group last week. Obviously, there's been a roller coaster ride from last week because it actually reversed. But we knew that this was just correcting. Okay. So we're holding. We knew where the stop loss was, and it has not been hit. It's nowhere close to being hit. But this trade will give about, if it plays out the way we are planning, should give us about, we are on 109.90. Let's say we enter to 108.90 to 110.96. That's about 200 pips that you can get from this trade. Okay, if you just trade it like this. This is very interesting. So you see, I didn't talk much about the labeling and the wave counts and all those things that people just want to put on the charts. I've just identified the patterns, the fractals, how they happen in the chart. Once you've got the eye and you're trained to spot these things, you can trade very profitably. So that's how we're going to trade US dollar JPY. Let me clear this one. Next one. Let me just check the chat box if there's any. Okay, if there's anybody who can just respond to the guy who's struggling to see the chat, you can just respond to him, but otherwise I do not have time to respond to that. Otherwise this video is going to be very long. So I'm going to go to the next chart. Euro US dollar. I'm going to try and run as many charts as possible. Switch it off. Go to the daily. Okay, most of you who've watched the previous videos, so do yourself the favor to go and watch the previous videos to see what the rationale is behind these trades. Because as I always say, Elliott wave is it cycles. You do not just come to one swing and label it. This pair is labeled from the monthly time frame all the way down to the lower time frame to a 15-minute chart. So to get the overall view and the labeling of the whole chart, go and check the previous videos, especially the one on the 31st of July. You'll see a detailed analysis on this one. So first of all, here on this one, Euro US dollar, we've got this impulse here. And then after this impulse, we got this correction. And you can see that this is the low of the impulse. It is not broken. And this one ends at the area of A. This is your AB, right? So this is a regular flat. After that, you've got another one that looks like a zigzag. There's also another ABC. Okay, and then after that, you've got this swing here. So I'm not gonna put in the labeling on this one, or I'm not gonna draw on this one for a good reason. So I'm gonna show you what I've just done there. So here, ABC is a regular flat. I'm gonna label this whole regular flat AW. This whole regular flat. And then this zigzag, I'm gonna label it an X. See, that's my zigzag. And then this one here, I'm going to label it a Y. And this WXY gives me a certain pattern. So those of you who have learned the patterns will know that this pattern breaks the extreme of this, the low of this impulse. It breaks it, and then it breaks this one. So that is an expanding flat. So we know these flats are divided into 3 waves. So you can see that on this W, we've got 1, 2, 3 waves. On this X, we've got 1, 2, 3 waves. And then Y can be 3 or 5 waves. So here, when I take off I'm going to take off these labelings that I've done in the annotation pen and just show you the labeling that I have. So this was that. The blue is that regular one. It's the regular flat. And this was the zigzag that I had. And now this one is ending in 5 waves. And you see that we've got 5 waves here. Okay. Obviously, these are not educational videos, but it's always, I always find it important to tell you guys that to get these labelings right, it's not just a matter of going there and seeing 5 waves and just labeling them as they are. I mean, somebody could have come and said, this is a 1, this is a 2, right? So then how do you know that this is your 1, this is your 2, and you do not have it the way I have it here? Okay? So if this was a 2 here, and this was your 3 here, because somebody could have done that. You see, there's complications. Different weavers will come and label this differently, but only the ones that are following the rules correctly will get it right. So you see, this 3 could have been here, and this 4 could have been here, and this could have been a 5. See? So then who is right? Who's doing it correctly? This is where learning the right way comes in. Right, so let me show you why I've got it the way I have it, and why I'm saying this move is not completed. Okay, so one of the rules is that your wave 3 should be at 1,618 extension. Okay, so I went and took my tool, my extension tool, to check my 1.618 extension if I had it on, if I had my 2 here. So this will be from 1 to this yellow 2. If this was supposed to be my AB correction on 2, right? So if I did that and my 1,618, you see that it is up here. So this cannot be my 3. This 3 cannot come and be here because it's lower than the 1,618. So this 3 can either be above, it should at least be above this. So that's why I came and put this 3 here. And when I checked here, the internals of this wave, wave 2 to 3, because now we see we've put our 2 here. So when I check the internals, 1, 2, 3, 4, 5, they were also complying to the rules. Let's check from 0 to 1 to the red 2. Can you see that this 3 is sitting exactly at the 1,618, which means it complies to the rules of an impulse, right? So this is why you're going to have a lot of different waivers labeling this differently if you're not following the rules. And if all waivers were following the rules, we would have exactly the same chart, or rather very similar analysis. So Euro US dollar, I'm saying that We are still on the yellow wave 4, which needs to complete. So this pullback here, I called it 2 weeks ago. And I'm actually not trading this because this is a corrective move. I do not trade corrective moves here. So the only time we'll look to buy euro again is when it breaks out of this correction. So we don't know how far this correction is going to be, whether it's going to come back to this trend line and it's going to be deep and then go. Okay, so the only thing we do is wait until it gets out of the correction. Wherever the correction is going to end, it's going to tell us. So that's where we are with euro. It is currently on correction. Any breakout and confirm and a retest of this of this one here will tell us that we are now ready to go to wave 5. Okay. And also you need to have divergence between wave 4 and 5 for it to be a valid wave count. So you'll see most of my chart don't have 1, 2, 3, 4, 5 because you don't always have 1, 2, 3, 4, 5. Most of the time you have 3 waves. So that's euro. You will wait for this correction to complete before you go long. I'm not bearish on the pair. I know this is just a correction, and I'll be waiting to get in again to complete this wave 5. So that's euro. US dollar CAD. I've done this one so many times. I think I've done it the past 3 weeks in a row, showing exactly all these patterns. So I'll do it quickly and just remove. You can see here we've taken another trade here. Let me just remove everything. So we have the impulse here. We have the impulse. I'm going to do the corrections in different color. We had this flat correction there. We had this zigzag correction there. We had this zigzag correction there. And then we've got in between the corrections, this zigzag there, this zigzag there. So you can see that the yellow corrections are in the same direction of the impulse. So this one, I mean, a correction is supposed to be opposite the direction of the impulse. So the ones that are opposite, I've drawn them in red. These are the main corrections. These ones, call them sub-corrections for lack of a better word. So that's just my way of understanding it for ease of reference. I just call them the sub-corrections. So this is how you label this chart. So your first correction, you label it a W. Second one, sorry, and then the sub-correction are always labeled X. Your main correction, second one is a Y. Sub-corrections is always an X, regardless of where it is. And then you've got a Z. This is a specific case where you have 3 types of corrections. You can actually have just one correction and then you go. You can have 2 and then it go. Then if you have only 2, it will be a double XY and then it goes. So in this case, Elliott only identified up until 3 corrections. So we always know that whenever we get this third correction, that is the Z, there's only one way, and that way is in the prevailing direction of the initial trend before correction. So this was the initial trend before correction, completed a WXY, XZ. If we were here, we've actually taken a couple of shots when we were at Y because we thought it would go, but it never went. But when it goes to a Z, we know that there's no other way but here, but to the downside. So we are still bearish to the downside on US dollar CAD, and we're expecting this swing to be the same size as this one. Right, so here it made a move up, and that was just giving us an opportunity to put in another shot. Okay, so you see here, as much as I've put in the labelings only come after I've identified the patterns, because that's the most important thing: identifying the patterns, identifying how they interlink with each other. Right, so I'm going to clear out everything. So you will also notice that whenever this pair makes these deep corrections, it just falls. So this is why I noticed here, when it made this deep correction, I knew it was just going to fall, because that's what happens here. You see deep correction, it just falls. Whenever it makes deeper corrections, it is just going to fall until 1,55 if this leg is supposed to be equal to this one. So the idea with this one is just to keep on selling the flags in the lower time frame. Just go to the 4-hour time frame. So whenever it makes, see here, whenever it makes these up moves, it's opportunity to sell. Yes, making another one. When it breaks, you sell again. Every time it does this, you just keep selling, selling, and all the way up until the left swing is equals to the one on the right. Okay, so that is how to look at on US dollar CAD, New Zealand US dollar. This one is a very interesting chart. It's a very, very interesting chart. It's behaving exactly as we have been calling it the last 3 weeks. Let's go to the daily chart. So this is the daily chart. So we've got this impulse that starts all the way from the top there. So this is our impulse here. So after the impulse, we had this leading diagonal in wave A. Leading diagonals happen in wave A and in wave 1. Right, so let me clear. It's just showing you the leading diagonal there. What is interesting about this pair, I always get very fascinated whenever I see the fractals, and we've got fractals happening on this pair as well. So notice this, we get an impulse and we get the correction. We get the impulse and then we get the correction. We get the impulse, and then we get the correction. Just see how clear this is. Okay, so all this, let's just undo. All this is giving us a leading diagonal. Let me draw it properly. Yeah. These lines are skew. Okay, leading diagonal. That's what it will look like. And this is how we're going to label it. 1, 2. It's 1, 2, 3, 4, 5. You can see that wave 5 actually pushes through here. It's actually expected. During the research, it was identified that mostly wave 5 tends to overshoot, and it did overshoot over there. Okay, and then in between, okay, this should have been in red. I should have done these corrections in red. So you see, in between 1 and 2, you get 3 waves. In between 2 and 3, you've got 3 waves. You would remember that I said you're supposed to get 5 waves in wave 3, but a leading diagonal is a different case. In the leading diagonals, you can get all waves to be 3 subdivided into 3, including wave 3 and 5 and 1. Okay, so that's what we have here. That's what we have on this one. And then after that, this is the leading diagonal. I've just identified this leading diagonal. We get this correction. See, we get this impulse and then a correction, the impulse and then a correction, the impulse and then a correction, impulse, then a correction, impulse, and then a correction, but in the larger degree. So now it looks like this thing is about to repeat itself here. Look, we've got this impulse, we've got this impulse, we've got this drop, we've got this drop. Okay, what am I anticipating here? I may not move it, just put it back where it was. I am anticipating that this will do this and then drop. Same way as this. See, this one went up and then dropped. So we are here now. I'm anticipating that this will do the same thing and then drop. And then this whole thing will give us a larger. So remember, this is the leading diagonal in wave A, B, C. And this C would behave exactly the same way as this one here. So this is the fractals I am expecting on this pair. This is not in the book. You don't learn this in the book, but you see that what we've just identified. Same way we've done it on US dollar JPY, exactly the same way we're going to do it here. We're expecting the same thing. So let's look on the lower time frame to see how we trade this. Now we know that this move is supposed to go up now, but then how do we trade the move? Because that's the most important thing. Let's come here and see how we trade this up move, if we can. So you can already see here, if you draw a trend line here, you can see that it has been broken. So it means that this correction is done. See here, it was done. And then we got this impulse. And then after this impulse, this thing is giving us this correction here. After this correction is done, this thing is telling us that it is ready to go. Then it will make that move, that first up move from the first swing. Maybe it will drop so that it can follow exactly the same fractal as the initial swing. But for now, we're not concerned about this one. We're just concerned about getting the trade to the upside. So wait for this one to complete so you can get the trade to the upside. That's New Zealand US dollar. Very interesting pair. Gold. For hours. Bring up the labelings. See, labelings in this wave counts are very confusing. It's easier to just get the patterns and be able to identify those patterns. Then you will understand Elliott wave. It's not about these letters that we put up on the chart. Right, so gold also very interesting, and it has been behaving exactly as we've been analyzing it for the last 3 weeks as well. So look at this one here. We've got the impulse here. Okay, if you just see here, we've got the impulse to the downside. So the impulse starts from way back there. So that is the impulse. And then after the impulse, just move this sideways. Impulse. And then we've got this larger correction, WX. Obviously, we're going to have a Y. It's out of the screen here. Okay. So let's join this up. I'm just going to join up the larger correction, the larger W, the larger X, and the larger Y. Okay. So we always work in degrees. So a degree lower than this, I'm going to go, let's just check which color I can use here. I'm going to use red. So you can see we've got this big, call it ABC. Okay, it's WXY. Okay, we already have it as WXY, right? And then under this W in yellow, we've got a lower degree correction. That is a zigzag. You see that? Under this X, we've got a lower degree in red. What do we expect on Y? We expect that we're going to have also a lower degree in red to complete this. But here on the screen, I've got 3 degrees. I've got a green degree as well. So that is a degree lower than the red. WXY under the red. WXY under the red. WXY under the red. I haven't even started labeling this. I'm just identifying the patterns and how they're linking with each other. I didn't label here, but this is what is happening. Green degree. On this red, WX, green degree, red, green degree. So when I started these webinars, we were here. Gold was here. It was just breaking out this channel here. And we knew that if we are on the lower degree, we just need to get a correction. So we said we want this smaller correction. Let me undo it so that we can see what we're talking about there. We want this lower correction to happen. It had not formed yet. We wanted it to form so that we can get this WXY in green. So you can see that we've already got this WXY in green, and then above the green degree is the red here. So we continued labeling this while we were on the trade to get this W and then the X. Okay, so we know now that this W and then X needs to complete this degree here. And then that degree will eventually then be the WXY. That is the degree higher than the red here. So that's why we're anticipating gold target at around the 1,320 area. So you see, as the markets unfold, you keep adjusting your labeling so that it can tell you the direction of the market. At any given point, you always know the direction. So you do not panic when you're getting these corrections that are going opposite the direction of your trade. So for example, I mean, we took the trade here. Just gonna give you a trade. We took the trade here on the breakout of this small flag, right? And then it went up. And I mean, somebody would have been saying, oh, it's going down now, and then they want to get out of the trade. Now, for us, we know that it's supposed to correct give us a deeper correction. So I did say that we need to get a deeper correction here. Okay, so after getting this deeper correction, it broke out. What do? We move our stop loss from here to here now, because we know if it breaks lower than this, then it's invalidating our wave count. So we just move our stop into profit. So we leave it in profit and let it go to the target that we're anticipating. So here it goes, and then it comes back again. I mean, if you're always on your screen watching the trade, you'll be on an emotional roller coaster because when it does this, you'll be worried that it's going down now. It's going to take me out. Because we're not worried now because it is on. It's running risk-free. We are in profit. We've locked this profit. Even if it was still small at the time, if it takes me out, it's taking me out on small profit. But it never took me out. It went. Eventually, around here, it was 600 pips. Okay, now it dropped here. But I'm anticipating that this is another WXY in green so that we can complete this move. So this is why I always say when you take a trade, set it and forget it. Set your stop loss and you take profit. You must have a plan for this trade. Know when to move your stop to break even, or know when to move your stop to profit. That is what we call trade management. And you make all these plans before you take a trade. You don't want to take a trade and midway through the trade when it's going against you, you're worried that it's going against me, it's wiping out my account. The fact that it's even wiping out your account means that you're not trading correctly, because you should not be worried if your account is not exposed. You must only be trading maximum of 2% of your account. So 2% of your account shouldn't worry you, and it shouldn't excite you the amount of profit that you're going to make when the trade actually hits profit. So I always say, if the potential profits of a trade excite you, or the potential risk of your stop loss being hit worries you, then you are not trading right. Your trade management and your risk management is not done correctly. if you're a trader, you should not your emotions should not be involved at all. You should not be excited about the profit that you're going to make, because it shouldn't be that much. If it's that much, then it means that you are overexposed, and then you're going to worry if it's going to hit your stop loss. Okay, enough with the pep talk. Let's go to the next one. So that is gold. I'm still long. I'm still anticipating that we'll get to 1,320, but I'm not worried now. My stop loss is here. My stop loss is under this swing here. I've locked in the number of I've locked in about 400 pips now here. So if this correction completes here, I am moving my stop here again. Then my trade is just gonna go. I'm not gonna lose any money. In fact, if it takes me out, it's taking me out. It's just taking my profit. Okay. So if it comes even here, even better for me. Then I take all my profit at this level. So that is what trade management is all about, and that's what you need to learn before you start trading. If you do not know this, and if you do not know how to calculate a lot size before you take a trade, you are not ready to trade real money. So that is gold. Australian dollar, US dollar. Let's look at the Australian dollar, US dollar here now. Okay, switch off all the labelings. This one similar to New Zealand US dollar. Let's get the drawing out. We have this swing here. And then that swing was corrected like this. Okay. And then after that, we're getting this one here. And you can see that this is a zigzag. This leg is equals to this leg. So we knew that when the zigzag reaches equal legs, we're supposed to get a pullback. So the rationale is we called this pullback as well 3 weeks back, and it has already happened. So now, same way you do with US dollar New Zealand. This pullback, you can see that it has broken out here of this correction. And also, it's important to identify between an impulse and a corrective wave. Okay, so that's not, I do not have time to do that here. So we've got this impulse now out of this correction, and it is now giving us some kind of a correction. Let me do that correct properly. So, and use a thin pen as well. Okay. So we've got this impulse. It's a very clear impulse. After the impulse, you expect the correction to confirm that now you're ready to go up, to continue with this move. But that has not happened yet. This is not completed yet. If we go drill down into the lower time frame, let's look what's happening in the lower time frame on this one. This is the 4-hour chart. I'm going to the 1 hour. Need to see what is going on there. Okay. Interesting one, this one. So this is how interesting it gets every time you go lower and lower into the lower time frame. So remember this trend line that you would have. You would naturally have this trend line. Okay, obviously that's freehand, so it will not necessarily be like that. So we got this impulse here. Let me draw this impulse with a thicker one. But the interesting thing is that impulse, this new impulse that broke out of the correction, also starts with an impulse. And then it looks like it's doing this. So this is what I expect here. So what am I drawing here? I'll show you now. It will make sense now. Remember the patterns that we've learned. Now, this is the impulse on the lower time frame. And it is being corrected like this. We had this drop, and we have this now zigzag that looks like it's going to form like this. This could break this top and move down. And then come here to this top, to this low, break it, and then carry on. And this move here would be a regular flat. You see here, this would be a regular flat. So it looks like we've got a regular flat forming here. Let me just take it out so you can see. We've got the impulse. We've got the correction that's forming like this. Then after that correction completes, then we'll have this move. So this will give us then a bigger correction for this impulse, and then we go. This is now on the 1 hour time frame. So we just need to watch what kind of structure it will give us here. Okay, so we use the lower time frame to get our entries so that our stops can be closer, so that our trades can have a good risk to reward ratio. Okay, US dollar ZAR. We've got a trade running on this one. Let's go to the 4 hour chart, time frame. So every time, this is just about identifying the patterns. Where's the impulse here? We've got the impulse. I would have expected, I wanted this to break this to confirm that it is really going. But now it is going down correctively. But what could happen is this could come, break this low at around 1280, and then go, giving us another regular flat. See, this is all just about patterns. If you were to label this, then you'll see what the labeling will be like. It will be actually be the correct labeling, unless just going into the chart and putting on the letters. So this is pattern identification. It's easy to label patterns after you've identified them correctly and to anticipate them before they complete. It's very easy to go and label a completed chart, but that doesn't help you because now a completed chart doesn't give you a new trade. You need to be able to anticipate a trade. So here we're already short on the South African rand, US dollar South African rand, that's USD ZAR. So we're anticipating that it will come down, break this low, and then it will reverse. If it doesn't reverse, there's a possibility that it can just carry on to the downside, because I'm expecting this to eventually go to the 11 rand area. Just clear, show you why I'm anticipating that it will go to the 11 rand area. I'm not going to go into detail. Watch the previous webinars. It is clearly identified why we are anticipating this to go to around the 11 rand area. So always our impulse and the correction. So we start with a zigzag. Let me do it with the yellow, same color. The correction is a zigzag. Oh man, I shouldn't do it with the yellow. I should do the correction with the red, because it's opposite the impulse. Any correction that is in the same direction as the impulse, if you remember, I label it an X. And then here, we've got this forming something like that there. So let me just label it quick first. So that labeling is only to guide you, to guide your wave count. So I'm going to label it now. So this first zigzag, I'm going to call it a W. The yellows, same direction as the impulse, I call them X. So there could be another zigzag forming here. The reason why I stopped drawing this zigzag here is that we could have something like this, which is what I was anticipating. We could have something like this, which is exactly the same as that. Okay, but it has not happened yet. So this is what I was anticipating here. We could have something like that. And then this will do that. So this will be another zigzag here. Impulse, correction, and then downside. So that has not happened. It could just do this, retrace like that, and then we'll go to 11. Either way, we are ready to go down. The bias is there. The bias is to the downside. So that is the South African rand. If I just go to the lower time frame, see what's going on there. So the only time we'll get out of this trade, let's put back the drawings, show you where we took the trade. So we took the trade here last week on the break of this flag. Okay, so it went down, it retraced, we're still going down. So the only time we're gonna get out of this trade is when it breaks down that low that we just spoke about now. Remember the low that I spoke about? If it comes and breaks this low on the 1280 area, then it will complete this pattern. This is your impulse, and then the pattern will be this one. Did not break the top. Regular flat that just breaks here. It will possibly reverse after the correction ends, or it can just go through. If it goes through, we're going to have our stop on break even or in profit actually. We're just going to let it run. So we're going to watch price action here on the trend line. If it gives us a correction here or just outside, we know that it is a trend continuation pattern, and then we're going to go. Otherwise, what happens after the end of this correction, you get an impulse move and the correction, and this will tell us that we are reversing again. And then this can go and take the top again and then go down. Okay. That's the South African rand. Audi New Zealand dollar, my favorite, clear structure. It has been misbehaving of late, but we've been short from last week. I'll show you why. I want to show you why we are short on these ones. Go to the daily. So that's our impulse. You can see our impulse. And if we were to label this impulse, it will give us wave 1, wave 2, wave 3, wave 4, wave 5. After wave 5, what do we get? We get an A. After an A, we get a B. And then a C, right? So let's look what's happening in that correction, because this is where all the mess is. We need to know when this correction is going to end. Okay, what happens here? Let's see. We got this impulse, A. We've got this correction that is now correct. This is now correcting this string. And this is this zigzag here. Okay. And now this is in the same direction as this impulse. What are we anticipating now? We anticipate that we're going to have maybe another correction here because it has already started. It needs to complete. We don't know what shape it's going to be, but it's already retraced more than 61%, 78% here. Okay, so it could be a regular flat. So then how do we label this? So this first correction, we call it a W. This is a W. This one is red and it's in the same direction of the impulse, X, and then a Y. See, this one is a double 3. We're anticipating that we'll have a double 3 correction, which should possibly end around the 1 area. And if it does get to that 1 area, then we're ready to go for about 1,300 pips. So we've got 2 trades that we're anticipating on this one. We're anticipating this one to come and complete the Y, and we're anticipating this big trade here after the end of the correction. So let me go to the lower time frame just to show you this correction again clearly. So we've got that impulse. We've got the W. Actually, this is a expanded flat. I always draw the ones that are in the same direction as the impulse, the same way. And we anticipate that this could come, maybe break this top or not, or just around the same area. If it breaks it, it can be an expanded flat, but we will know when it ends. Okay, so at the end of the day, what we are going to have is this first correction, which I had labeled a W, second one, which I labeled a X, and the third one, which I labeled a Y. So if you remember, the labeling is 1, 2, 3, 4, 5, A. Now B is this whole pink correction. And if we get there to the 1 area, we'll be buying for 4,300 pips. Because this will do an A, B, C. You see this pattern here? It will be another regular flat. The yellow could make a regular flat. Could also just take this top here. You see how important it is to identify the patterns. It's all about patterns before we put on the counts. Okay, so that's what we're going to be looking at on this pair. So now we need to drill down into the lower time frame. So remember, this is the piece that we want to trade now, this downside here. So now I'm going to go to the 4-hour time frame to see how we're going to trade this piece to the downside. It's clear. So there's that piece that I want to trade to the downside. So when I go down to the lower time frame, the principle is still the same. I still see the impulse. And then this impulse starts being corrected. You can see here there's some kind of a correction here, which I'm waiting to end. But notice this has already broken this extreme. So we could be getting an expanded flat. All right, if it does not break here, if it falls short of this, then it will be a running flat. But either way, we know that after the break after the end of this correction, we're going to have this trade to the downside to at least break this downside here. And that is about 400 pips that we can still get here. Okay. Still 400 pips that we can still get here. So let's look how this is behaving currently, because we are short on this pair. Let's bring up the labelings. So this is that expanded flat that we could possibly have. That is that. I've just shown it in blue. But let's look, because some of our members in the group have been worried about this pair because we've shorted it and it has not played out. It has gone up actually. But as much as it is going up, as much as it is, look here, from here, let's get the drawing out again. See, from here to there, this makes a new high. But exactly where we are on the MACD, it makes a new low. See, a clear divergence. So as much as it is going up, the MACD is going down. So MACD doesn't tell me that the trend is where the trend reverses. It tells me that the strength of the trend in that particular direction is now slowing down, right? It's now weak. So it is going down, and you can see that it's going down very slowly. And at the moment, I'm not worried. Our stop is still not hit. It's above that trend line over there. So we are anticipating that this will give us some sort of a correction. When this breaks to the downside, then we get the trade. Okay, about 400 pips that we're going to get here. Okay, so the MACD is telling us the strength of the uptrend is there's no strength in the uptrend. It's very weak. Okay, so, and it has broken already the top. So we're anticipating this down move pattern. You just need to complete this pattern. That's the flat correction. Okay, next one. I'm going to run a bit faster now. Audi Chief. Audi Chief is easy. We've got this ending diagonal. Ending diagonal in wave C. And after the ending diagonal, you get an ABC. I just want to get this out there. It's clear. After the ending diagonal, we get this impulse to the downside and then a retracement. So you can already see that this trend line to the upside has been broken. And to confirm that the trend line has been broken and the trend is reversing, the trend line must be broken and we must get a correction. And that's what we're getting here. So when this correction breaks to the downside, then you can sell this one here. To get this flex, you must go to the lower time frame, maybe the 1 hour time frame. So that is Audi Chief. New Zealand CAD. Let's take this off. Take off the drawings. We've got the impulse. Got your impulse over there. And then after the impulse, you can see that this zigzag retraces to about 61%. So zigzag retraces about 50%, about 50 to 61%. So we've got the impulse, you've got your A, you've got your B there. And it looks like it's about to complete the C. I don't see any new trade there. I don't see any new trade. And we may get a move up to the upside after this correction. Okay. So that's the New Zealand Canadian dollar on the 4-hour time frame. Okay, you can see that I'm anticipating it to complete that zigzag movement. Impulse. Okay, that's the movement we're looking for. So it's going down very slowly here. You can see that this down move is not very fast. It keeps doing this. I actually don't like trading this pair because it's just too slow. You get an impulse, it corrects. After the correction, it breaks down. Corrects. After the impulse, it goes down. It's doing the same thing here. But this trade is going to take forever to play out, and it's just going to play out with your emotions. So I'm not in this trade, but if you want to trade it, that's how you will trade it. You just keep selling this flag, keep selling the flags. Okay. Audi CAD, this one we also shorted, but it's been going very slow as well. Okay, and here's the reason why we shorted this one. This is Audi CAD. Take off the drawings, go to the daily. Okay, so always we've got the impulse. See, I always start with an empty chart. So most of the time, people learning Elliott wave will go learn the theory, and when you come to the chart, you don't know where to start. So this is how you start analyzing. You start analyzing from the higher time frame. So we've got this impulse, and then I've got this correction. I've got this correction, and there's this correction that looks like it's playing out here. But in between, see, same direction as the impulse, same direction as the impulse. These are my axes. I always call the ones in the same direction as the impulse axis. So the first correction, if we were to label this will be your W, this will be your X, Y, this will be your X. So we want this Y to complete a pattern. So we don't know which pattern is going to complete. Sorry, Z. This is going to be a Z. Excuse me. And this will give us a W, X, Y, X, Z, similar to what we had on US dollar CAD. So after this completes this move, then we'll have the big move to the upside. So this correlates with the Audi New Zealand that we were just analyzing earlier. So I'm just going to clear out everything just to go to the lower time frame to see what we were looking at when we took this trade. So we were looking for that Z to go and complete there, similar to the way we traded US dollar CAD. So this was that Z. here. We wanted it to go and do this. Okay. So how do we do that? We wanted this to break. Wanted this to break here. So when this broke here and made a flag, it went. Let me do it clearly. Let's zoom in a bit. So we're anticipating the move to the downside. So when this broke this trend line, see it broke here and then it made this correction. And that was confirmation for us that it is going. When it broke this and corrected here under the trend line, it was confirmation that it was going. And it did go here. And also now it's actually making another flag. So if you're interested in this one, you can also short it, but it looks like it's going very slowly. But it may start moving because we're now anticipating that the Aussie will be weak in the next coming days. Okay, so we'll be looking for this move to the downside. That's why we've taken a shot there. As you can see that we've got this trade entry here. Okay, that's Audi CAD, pound US dollar. It's in this big triangle that we sold from the blue box the day before the last NFP. So this one has already given us this impulse. Let's do it with a thicker color. It has already given us this impulse. And now it is consolidating on the trend line. When this breaks again, it will be an opportunity to sell this one again to the downside. This trade, that's what you're looking for. And to get that trade, you need to wait for the break of, you need to wait for the completion of this flag. This flag needs to complete first. You can see still under formation at the moment. It needs to break to the downside to confirm. So it may do this and be even deeper. So you will only sell when it breaks out. So that's pound US dollar, pound Audi, if you like to trade patterns, there's a very clear Gartley pattern for a reversal there. But let me show you why we've traded this pair and why we're expecting it to go up now. Let's clear out everything, switch off the drawings. Rather not switch off and just take off the pattern there so that this can be clear. So this is where fractals come in. This is where fractals become very interesting. It's like a copy and paste. You just copy what is happening on the left and trade it on the right. Okay, so this is what happened here with this pair. So we had on this right string, look at this right or left string and compare it to the one on the right. So this is what happened here. We got this one here, we got that one there. We got that one there. You will understand why I expect New Zealand US dollar to behave exactly the same way. Okay, so that's the string on the left, that's the string on the right. Pulls back, and then goes up to 3. Pulls back, goes up to 3. After 3, what does it do? It corrects. It corrects to number 4. Same way here, even though it's small, but it was going down correctively. It was doing exactly the same. After 4, it goes to 5. After 4, it goes to 5. After 5, it does this. After 5, actually, we spotted this fractal when this pair was here. then we saw that this is doing exactly the same thing. So when we spotted that this the left and the right were the same here, then we thought that this is going to go up the same way as it did here and drop. Right? Remember this one, this side has already played out. So this drop has already played out, and now we're here. So we're anticipating that after this completes here, the same way that this completed and dropped like that, this one completed and dropped like that. And then this one drops. So now we're already in the trade. Drop. Pulls back. Look at this. Pulls back. And then it drops. Same here. And then it drops. So what am I anticipating with this pair? I was anticipating that this, see, it does what it does this here. It goes down correctively like this. So I was anticipating that this pair will do the same way as this happened here. And then we will be in the up move again. Okay, and that rationale, okay, actually we've closed this trade here. We've closed this trade now because it has already played out this whole fractal. So now we've got this pattern here. We've got the bet pattern starting here. No, Gatli. It's a Gatli pattern. That is already completed. So we'll be anticipating that move to the upside. Okay, to start a new swing. Okay, so that's how we're looking at Audi New Zealand. Let's just go to the daily, see if there's anything we can spot there. So besides the fractal, this was that pattern that we were trading was, the fractal we were trading was actually a pattern. So this, what happened here was that we had the impulse. And then you had this correction. And this is a expanded flat. And then this expanded flat is now being corrected. So what you could have here is this, I will label it as a W. This is the whole flat. And this is the X. So what could happen now is that you could get another pattern. I don't know what it's going to be. I don't know if it's going to be a zigzag or a running flat or a regular flat. All I know is that after this, we must go up. And then that will give me impulse, W, X, Y. And then if it gets up to this around this area, then I'm getting this regular flat. So you see, so that pattern, that fractal that we were trading was not just a fractal, it was actually a pattern that was playing out. So we had a number of confirmations to trade this pair. So now we're anticipating this up move here. Okay, we're already long on this pair. In the premium group, let's clear out everything. US dollar JPY, we already discussed. Euro JPY, very interesting. Euro JPY, very, very interesting pair, this one. Also just took a long on this one. So what we had was this impulse here. And obviously, as you can now already see that we're getting this A, B, C, right? And I anticipate that this would be exactly the same as that. At the moment, this was still short. There was still this piece missing here for this to be equal. So I'm going to go down into the lower time frame to see how we can get this piece to the upside. It's a very risky trade because we're already on the downtrend. So, but then when there are clear setups, you cannot ignore them. Okay, now this is the 4-hour chart, and this is what I was looking at on this pair. Going down lower, you can see this impulse. After the impulse, I get this correction there. You see how clear this correction is there. This is a clear expanded flat. Breaks the top and breaks the A. If you go read the Elliott wave theory, it will show you that this is an expanded flat. And then after that, I'm now anticipating that we will have that short move that is missing. And when I measured, that move was actually at around the 133 area, which could give us another 500 pips. This move can give us another 500 pips just because of identifying this. Okay, we're already long on this piece as well, and it's about 50 pips up now. We took it on Friday. So we just identified the patterns. Okay, so if you were to label this was going to be your A, B, C, and then you carry on. Okay, see how easy that is. That's 0 JPY. Let's see if there's anyone of interest. Let's just look at Euro Audi. And then maybe we'll do the last two. We'll do oil and Bitcoin. This one has got a very nice, clear structure. We've got an impulse. Actually, we still have a bit of time. Okay. For the impulse, see this zigzag here? After that, we've got this one. You can see that this correction here, it's already been broken to the downside. So what are we anticipating? We're anticipating the down move. These ones were posted last week. We actually took it here. Got this correction. We can get this correction as well here. So that correction, it can be anything. It does not have to be a ABC. It can be a flat, it can be a triangle, it can be anything. So this cannot be a triangle on a Y. The only correction it won't be is a triangle here, because a triangle is a continuation pattern. So that's what we have here. So this flag here will just confirm that we are ready to go, but we already took it here, so we're not worried. Okay, and when it goes, we're just gonna move our stop here, right? And then this is a W, the one in red, and this is an X, and whatever correction we get here, then we're gonna have a larger impulse W, X, Y. So what are we looking for here? We're looking for this flag here. You can see that there's a flag forming. Flag forming. When this completes, check it properly on the 1 hour time frame. Go to the 1 hour. It is mostly clear on the 1 hour time frame. And the nice thing about flags is that they give you a good risk to reward ratio, and you put your stop loss. So for example, if you were trading this, actually this is not exactly making a flag. This is actually making a pattern. Okay, so when this goes to the downside, when this breaks to the downside, your stop loss is just going to be a few pips above here. Right, so instead of your stop loss being here, now your stop loss is here, and you've got a very good risk to reward. So this is actually making some sort of a pattern. And then after that, it may do this, and then we go. Okay, so we are short on Euro Audi. We also short on Euro New Zealand, same rationale. See, it's doing exactly the same thing. Exactly the same. We need this correction to complete for a move to the downside. Okay, until this is completed, we do not take this trade, but we took it here, so we're not worried. We're just waiting to move our stop into a few pips profit. Okay, all these trades we sent onto our free group. So we're just waiting for this one to break to the downside. Once it breaks, and we confirm the break, our stop is moving here. And then we're going to run this trade all the way down, risk-free. That's Euro New Zealand. Let's look at oil now. Okay, if there's any chart that didn't discuss that somebody is interested in here in the group, just type it on the chat box. Then we'll maybe have a time to look at a few at one more chart. Now this is oil. For those that are interested in trading oil. So oil, this impulse starts here. We've got a 1, we've got a 2, we've got a 3. Looks like we're getting an AWX. We don't know if this X is completed yet. Then we're going to get a Y. Why am I looking at it like that? After this 1, 2, 3. Oh, sorry, I'm confusing you here. Let's just do this. Between these 2 and 3. We have 1, 2, 3, 4 in the lower degree, and then 5, right? And then after that, you possibly get a correction like that, which is, remember, this is the larger one, this is the larger 2, this is the larger 3, and then this could be the larger 4. And this W should be in the same degree as the red. WXY, same degree as the red. And then we're going to get then that last move, which is a 5. So for now, we're still anticipating this move to the upside. Okay, so let's drill down here to see if we can get this move or if this move has started yet. Okay, just bring up the labeling so you can see clearly. So that's that 1, 2, 3. We're anticipating that 4. So we need to drill down here to see when we're going to start this move to Y. Okay, we'll zoom in there. So the only time we'll know that this move to Y has started is when we get, let's go down lower to 4 hour. So you can see here it has broken out. You get this impulse move here. So now the only thing we want, lower time frame, 1 hour. If we get something like this, then we're buying oil. We're buying oil. Let me do it clearly so you can see, because this there's a nice trade setup here. Okay, so we've got this. I want to do it with the pen. So this is the this correction that we were having here, this broke out of this correction. So we need to get a correction in the 1 hour time frame. That's why I've got the arrows like that. If we get this, you're going to be buying oil for about another 500 to 600 pips. So you just wait for this flag in the lower time frame, buy it there. If you do not have screen time, you can put in your buy order there, just above the start of this flag. So the rationale is to buy it only after it breaks out of the flag. So that is oil. Okay, Bitcoin. Some are interested in Bitcoin. This has just been in an uptrend forever. It has just been skyrocketing. Then this one has got a very nice, easy setup. Okay, so the only data I have is as available on the screen. That's all the data I've got on this one. So what I see there, you can see that impulse there. After the impulse, we've got this correction. After the correction, there's a 1, 2, and there's a 3. See, the reason why I put a 3 here is because only here it confirms that it is above the 1,618 area. So this 3 could not have been here. It could not have been here. It can only be here where it is above the 1,618. So after 3, I expect the 4 to be somewhere. So I'm expecting a sideways correction here. And then after the breakout of this correction, Bitcoin will continue the move. So at the moment, Bitcoin is still very strong. Upside movement still prevail. So if you want to trade Bitcoin, just look for what the correction that's going to happen in between wave 3 and 4. When that completes, then we're going to complete that move to the upside. All right, I think that has been long enough. And let me just check if there's anything on the chat box. If anybody wanted any chat to be discussed. Pound Audi we already did. So I think we're running out of time. Pound JPY I already sent in the free group. You can just check the analysis there. All right. Thank you very much for attending. The video will be available on YouTube as soon as it is processed. Thank you guys. Cheers. Bye-bye.